Thank you for joining me for a more in-depth look at the information I presented in Winning Investor Daily. And I want to cover the link between the trucking industry and the stock market. So truck shipments have been growing sharply, and that caught my eye because truck tonnage year-over-year change shown here in the chart should be indicative of economic growth. If the truck industry is growing, we should be seeing an increase in factory output and other economic measures. Now, there has been some press about a shortage of truck drivers, and while I'm certain the articles are factually correct, we're not seeing an increase in wages in the Bureau of Labor Statistics data for truck drivers. So until we see an increase in wages that's significant, I'm just not sure we have a shortage. I think we have anecdotal shortages, but there's enough people to fill the jobs for now. Otherwise, wages would have to rise. So what does trucking tell us about stocks? Well, way back in the 1800s, Charles Dow figured out that the stock market and the economy were linked together. And he was really the first to make this connection. And in particular, what he found was that railroad stocks were a good way to forecast the economy. And at the time, understanding the economy's booms and busts was critical because the U.S. economy suffered frequent panics and frequent booms back then. There was no Federal Reserve to moderate the business cycle, and it was basically pure joy or pure pain for a number of individuals in the economy. So forecasting the economy was critical for investors at this time. And Dow noted that railroads and other transportation stocks, within his index, he included a steamboat company and Western Union, which was moving money at that time. So his goal was to forecast economic trends. Later, he added the industrial average and said, these two indexes and the economy, they really work together, and we can forecast the stock market based on all this information. So what he was looking for was the long-term trend, and it became known as Dow Theory. So stock market prices discount the future. And what this means is traders look forward. They're buying a stock today based on what they think it's going to be worth a year from now. So if traders are buying, they're expecting higher prices. If they're selling, they're expecting lower prices. I know that's not a startling insight, but at the time, it was significant. Now, when both the transports and industrials are moving in the same direction, they're telling us what the economy is likely to be looking like 6 to 12 months from now. So let's say they're both doing well. Well, that's an expanding economy. Railroads are delivering raw materials, factories are using those raw materials to make finished goods, and then the transportation companies take those goods back to market. Everything's busy. If industrials are doing well but transports aren't, the economy's slowing. The industrial companies don't have new orders, so there's a slowdown in the raw material link of that chain. When transports do well but manufacturers struggle, it means the economy's breaking out of the recession. It means raw materials are flowing, and we should see an upturn in the market pretty soon. Well, Dow's theory works. It did turn down well before the bear market, and it was one of those indicators that gave a signal right as the bear market was ending. At the bottom of the chart, we have the transports. We see the breakdown there mid-2007, clear downtrend here. In early 2008, we get the breakdown in the industrials. We had a false rally in transports that could have led some investors to believe the market was turning up, but the industrials didn't. So Dow's theory worked great in 2008. It'll work great again. It has worked well for almost 120 years. Right now, the data from the trucking industry is bullish. There is more economic growth than a lot of forecasters are giving credit to. It's telling us expect new highs in transports. This is all bullish for the economy and the stock market. We should be selective, but we should be bullish for now. That's all I have. Thank you for joining me.